This is what I call the CPA's inside guide to tax planning. You see, a lot of people don't really understand what tax planning is or how it works. They think when they send all their information to their CPA to prepare their return for the prior year, that the CPA is somehow going to do tax planning and get some kind of magical result on their tax return. That cannot be further from the truth, so I wanted to go through what actually tax planning looks like and how to get the best result for clients in doing it and how you can recognize that you're actually going through a valid tax planning process. My name is Merrill. I'm a CPA. I've been doing tax planning for clients for the last 20 years and helping them save tens of thousands to sometimes millions of dollars on their tax returns through using a tax planning process. So the first step in the process is that it has to be done before the year is over. It can be done as late as the last day of the year. That's not ideal. It won't give a lot of time to get a lot of things done, but it's better than the following day. Then by the time the year is over, there's, it's kind of like a pencils down. There's a lot of strategies and a lot of things that just go away. There's still a few things that you might be able to go back and do, but a lot of the really impactful things are kind of dead at that point. So the first step is it must be done before the end of the year. Ideally, you would start that tax planning process usually sometime in the summer or the fall. In some instances, it can happen like right after the end of a tax season. Start planning for the upcoming year, especially if you know there's going to be a significant event like this year. In May, a client reached out and said, hey, my company's being sold. I'm going to recognize millions of gain in the next couple of weeks. What can we do? So we started tax planning in May for that client because we knew what was going to be happening. So it has to happen before the end of the year, ideally starting in summer or fall. That's the first step. The second step is the CPA or the tax planner will then get all the information they can from you to estimate your income for the year. They're basically trying to prepare your tax return before the year is over to estimate how much income. If you don't know how much income you're going to recognize, it's very hard to do tax planning because tax plans all stem from the amount of income and the amount of tax that's going to be due. There's different strategies based on that type of income and the amount of income that's coming through. So step number 2 is get a good estimation of the tax and income that is going to be coming through for that year. Once that information is known, then the planning can take place. Then we start to look at, is the entity correct? Do we need to change to a different tax entity to get a different tax result? Are we recognizing all the correct deductions that can be taken? Are we looking at home office deduction? Are we looking at an Augusta deduction? Are we looking at paying children? Are we looking at retirement options? What deductions do we need to consider and take on that? Then we're looking at strategies that can be implemented and employed. Maybe there's charitable strategies that can come into play. Maybe there's business strategies. There's certain things and levers that can be pulled to help reduce taxes. Maybe there's some credits that can be recognized. There's like R&D credits that are potential and a number of other things that can be looked at to help with that. Retirement planning can certainly come into play. Maybe there is equipment that can be purchased. Maybe it's a vehicle purchase that can help offset credits or offset taxes. We don't always like to default to go out and buy a new truck every year to save money on taxes, but if a new truck is needed, then that's a great tax planning strategy that can help with that. And once you've identified strategies, usually, as a CPA, is what we do is sometime in the summer or fall, we're getting all of our clients' information. We're running tax projections to say what the tax looks like. And we have a tax planning software that actually gives us multiple columns. And in the column number 1, we say, okay, if we don't do anything, this is what your taxes are going to look like. Then we use all these other columns to come up with scenarios and strategies. And we say, okay, if we use this strategy, this is what it looks like. If we use a separate strategy, this is what it looks like. If we combine those two strategies, this is what it looks like. If we combine those strategies with another strategy, this is what it looks like. And we start to give our client an idea of what their taxes look like by implementing specific strategies for them. And then once that client recognizes and understands what all those strategies are and what the costs of those strategies are, they can then decide, okay, I would like to implement strategy 1, 3, and 5, or 1, 4, and 6, or whatever it is, they get to pick. And then we go to work implementing those strategies and making sure that everything is in place to effectuate those strategies on the tax return before the end of the year, or before the required time. Then, once the tax return is prepared the next year, we then compare that tax return to our tax projection and our strategies to make sure everything matches up, so that we can explain to the client if there's any difference in those strategies. So that's the way that we do tax planning and how most people do it. Again, you meet before the end of the year, you get all the information, you run the projection, you come up with strategies, you implement strategies, then you compare it to the tax return. And then you start the process the next year by getting information for the next tax year. And tax planning involves both life and business. Tax planning can be done for, it's very powerful for business owners, but there's a lot of things we can do for non-business owners as well, for W-2 incomes, especially if you've got a W-2 income of, say, $300,000 or more. There's specific strategies. There's different strategies that kick in for $500,000 or more, different strategies that come into play for $1 million or more. So that's why we have to run that projection, because how much income you have determines what strategies are available and how we can help. If you'd like to continue to get tax updates, make sure to subscribe to our channel, and to get our weekly updates, make sure you subscribe to our newsletter at taxtutor.com.